Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial. And in this video, I'm going to talk with you about workplace life insurance programs. And to do that, we're going to look at a live example for an actual program. In fact, one of the biggest in the world. The example we're going to use is called FEGLI, and it's for employees of the federal government. But it's a great example generally because whether you work for a private corporation or a nonprofit or an academic institution, if you have a workplace life insurance option, then the odds that it works similar to FEGLI are very high. Not guaranteed, but very high because this is pretty typical. And to look at FEGLI and talk about why it often isn't people's best option, we're going to use a specific example from a real client. Now, I'm going to screen share here, and we're going to briefly take a look at the publicly available information about FEGLI's rates. And we're not going to spend much time on this page. So if you're somebody who doesn't like tables of numbers very much, don't worry. If you're somebody who does and you like to delve into those details, you can hit pause. But the key point here is that you see that as an employee gets older, their rates go up. Whether you're paying monthly or biweekly, your rates go up as you get older. Now, for this particular example we're going to talk about, the client is currently 50 years old. And typically, all else equal, for each year of age, rates go up. So on average, a younger person will have lower rates, an older person will have higher rates. And this person is looking at options outside of FEGLI. And that's a trend that we've been noticing as folks kind of reassess whether the role they're playing in the federal government is still aligned with the type of work they want to be doing. And this individual came to us looking to explore her options. And she's actually looking like she's very likely to get an offer of standard pricing from a carrier called Banner. And specifically, the policy she's interested in is a 20-year term policy. Now, when you see 20-year term, that means that it's 20-year level term, meaning the premiums are set at the same level, guaranteed not to go up for the entire 20 years. And you can see that if she accepts that coverage right off the bat, she'll be saving money, right? Because the blue line is what she would pay with FEGLI if she kept her FEGLI going. And the green line is what she would pay with the 20-year term policy from Banner. And a 20-year term is just what makes sense for her given the needs of her family. And I want to highlight that, standard pricing is a really good offer. There are levels of pricing that are a little bit better than standard, and there are levels of pricing that are a little bit worse. But ultimately, like when you need to get insurance coverage, there are different levels of pricing, and you just try to qualify for the best thing available. And for somebody who's able to qualify for the very best tier of pricing, you can see they would save even more money. But even at standard pricing, it's a really meaningful savings. Now, the last thing I'll mention is like, well, what happens for somebody who's maybe harder to insure? And I'm going to make a separate video going into the details on that because it is a little bit more of a nuanced analysis. But I'll just show you quickly, like for a table 6 offer, right? And to be clear, table 6 is often awarded to people who have a more meaningful event in their health profile. Perhaps they survived cancer or a heart attack not a super long time ago, or perhaps they have a congenital defect and the shape of their heart is a little bit different from what's considered normal. So table 6 is still great because it means that you can get coverage when you need it, but it is more expensive than standard pricing. And so in a separate video, we'll go into like, well, how do you think about it if you're looking at this light blue line where you're not saving money right off the bat? And I'll preview with you that the answer is probably not what you would guess. Now, again, though, because this particular client is looking like she's on track for a standard offer, this is a total home run, right? Save money right away and have coverage locked in the same fixed rate for the future and not be on this hockey stick up. Now, thanks for joining us. If you want to find out what type of coverage makes sense for you or a loved one, or if you're an advisor, a client, feel free to visit us at aboveboardfinancial.com and we'd be happy to help you, including running this comparison of workplace versus individual coverage. All right, take care. See you soon.